All right, folks, welcome back. This is the weekend edition for January 22nd, 2021. And I'm going to end this video with some ideas on how you can prepare for the coming year's lessons and content, because it's a little bit richer than it has been in the previous years. The benefit is going to be really seen with the new group coming in. They won't really appreciate the level of delivery and immersion that I'm going to give versus or in contrast to all the previous years. And the reason why is I'm trying to empty myself this year. I want to give you everything that I intended to teach and have it completed by the end of this year, so that way we can go as a community into the forum and spend more time there and less time making videos. Okay, I'm not saying I'm not making videos. I'm promising one video per week after we get through this year. So in 2022 going forward, it'll be just one video per week, and majority of my time will be in the forum. It'll be easier for me to interact with you. A lot of you are wanting that anyway, and it'll be easier for me to just throw charts up on the forum. That way it's quicker, more time efficient, and it'll just be a lot easier to do that. But the main portion of this video at the end is for the charter members. Okay, so some of you may be saying, well, why didn't you just make a separate charter member video? Because I didn't want to do that, because I have to do multiple videos and renderings. So I'm trying to reduce the amount of workload and admin time, because we do multiple user group editions or renditions rather of these videos, each one having a different watermark, so that way I can track who is sharing what when they try. So again, just as a reminder, the last portion of this video is really aimed at the charter members. All right, so here's the economic calendar for the week to come. I've included Australian dollar and Canadian dollar in the rundown. So for your filter on forexfactory.com's calendar, I did a settings on the coming Monday to the coming Friday, and used the euro, cable or British pound, the dollar, Australian dollar, and Canadian dollar. This is what you get as a calendar overview. And on Monday, medium impact euro, we have a speaker, and 11:15 medium impact, we have another speaker for euro. Australian dollar all day is under a bank holiday. On Tuesday, medium impact for dollar, consumer confidence, and at 7:30 p.m., high impact CPI number for Australian. And Wednesday, 2 p.m., we have FOMC statement and medium impact federal funds rate, and 2:30 FOMC press conference. So we have FOMC week. And what do we do with this? So the protocol is you want to try to find your setups on Monday and Tuesday, and anticipate Wednesday being quiet, just a non-event up into FOMC. Now FOMC may become a nothing burger too, meaning that really nothing happens, but Wednesday is basically a no touch day. Okay, we don't do anything with Wednesday. And on Thursday, we may see some cleaner price action on dollar at 8:30 a.m. New York session, high impact, advanced GDP. And then we have the unemployment claims, medium impact for dollar. And on Friday, 3 a.m. and Friday, how did I get that Swiss in here? You guys know I never have the Swiss franc in any of my discussions, but I'm not sure how I got that there, but there it is for you. Okay, you can see it. Medium impact economic barometer. And just so you know, I'm not trading and I don't trade Swiss franc. But 8:30 a.m. medium impact for Canadian dollar, GDP on Friday closes our calendar. All right, so let's get with the analysis on the dollar index. All right, so we are looking at the daily chart of the dollar, and Obviously, we start now with a blank chart. I'm just going to tell you right before I show the annotations, because I don't want this to be a long drawn out process and it's a little annoying for me to keep saying it. Just know going forward, there will be a period where I'll show you the chart empty and I'll say, okay, pause if you're not ready for the annotations. Okay, that's all I'm going to do. So if you're still studying, pause the video so that way you can hold off seeing my annotations. All right, so you can see not much has changed. Everything, the framework is still here. The only difference is my concern is that we may not need to get up into the premium. We've held a rather meandered around inside this range here, not being able to even pierce this old high, and we have yet to take out this low. Now we did dip into this here and rallied up, and it felt as if they were going to go into at least the premium level. Didn't do it. So we are held in consolidation. The fact that we have not ran to a premium, to me, at least on the surface view, it looks like dollar is likely to resume its bearishness. And this was just a consolidation, a part of a longer term. Like this right here, like this consolidation on a larger basis is just basically something like this here. So I'm looking at how we traded back to this day's low, and then we had this one single down day, and then the next day on Friday we open and trade back up, closing in all the sell side and rebalancing to Wednesday's low. So I'm going to open my week up with Sunday's expectation that it should be weaker. Okay, it should open softer, and what I mean by softer is maybe opening below Friday's close and then looking towards making a run into here. And if we take out this low, then I think it'll probably start to be a little bit more accelerated. Not big ranges. I'm not saying that we're going to see that, but it could. But I'm saying that I believe that I was most likely incorrect here, at least as it is right now. Now, obviously, if it starts screaming higher and we trade above Thursday's high, then I'm going to resume this framework here. But I've only included this framework so you can contrast how I was incorrect in my assumptions going forward, which is fine. You're going to see me get it wrong sometimes. But I've already outlined the fact that January is a time when I don't trade anyway. And this is the reason why I don't trade in January, because I'm more apt to being incorrect with my analysis. So if I know there's a time or a season when I'm likely to be off or not so dialed in, or the market's just, which is what I'm teaching you, the market's just simply not primed to move yet. So you have to give it time to warm up and then start having their initial displacement. We haven't really had that yet. We're still inside of a range and nothing terribly exciting has happened yet. I wanted to see some flurry of action around the 20th of January. We didn't get anything. It's been a nothing burger all week last week. So with that said, I'm willing to suggest to you that if we go lower, it's going to be attacking this eventually and going into the rejection block, which has yet to be treated to, and then we have sell side liquidity down here. So I'm looking forward to this week to see if we do in fact resist the idea of going above this short-term high, and near-term resistance to me, which sets the tone for going back to this idea. Okay, what makes me go back to this idea where it can reach up into these levels? We have to trade above Thursday's high. Okay, so Thursday's high sets the tone if we go up. Otherwise, right now at the moment before Sunday's opening, I'm thinking that we're probably going to be softer and start to resume going lower on the dollar. It might not take out that low. It might just go down a little bit more and trade into the mean threshold of this down close candle, and that might create an opportunity for it to then start resuming back up into these levels here. So that's one of the things I'm looking for. So I'm not just right into a short and it's going to take up this low and go right here. There's a lot of measuring and weighing out what it's going to do day by day. So again, it doesn't have the ideal one-sidedness that I'm teaching you to have in your analysis and only operating and executing in those environments. In plain terms, I'm only telling you what I think is likely to happen right now, but I still would not take a trade. Okay? I can't make it any plainer than that. I have to give you my opinion because we're here each week. But these opinions in this climate, it's just an opinion for you to study. And last week you saw me commit to the lower euro, higher dollar, and nothing happened. It just was what we have here. So if I would have traded, I would have suffered a loss. That would have been a losing transaction had I taken a trade, okay, and allowed it to go to my stop. When we get to the euro, I'll give you some suggestions how you can annotate your chart and not allow it to be self-defeating or annotating victimhood, in your analysis. You don't want to beat yourself up because your brain and subconscious will remember these events, and you'll start to look at charts or trading as a uncomfortable thing, whereas you want it to be in a pleasant but not overly stimulated environment. In other words, you don't want to get a high off of doing it, but then you also don't want to be fearful either. You want to be indifferent. You want to be simply detached emotionally. You don't want to have any association whatsoever psychologically to needing the outcome to be in your favor. If it doesn't happen in your favor, okay, fine. Because if you emotionalize, okay, or if you personify adverse results, then you're never going to be able to trade, not at least consistently or profitable, because you're making the result of your analysis and or eventually trades the bottom line determination of whether you're successful or not on a one transaction basis or a 1 day basis or a 1 week basis. And that's what myopic new traders do. They put so much gravity on a short-term one-time transaction, and they dismiss everything else beyond that because they think that they can't do it, or the system doesn't work, or the concepts don't work, when I've already outlined in the beginning that, and it's only really for the benefit of the new people because they don't know this, but coming in every January, it's like this. It's a slow start. Nothing terribly exciting happens in the month of January. It just doesn't happen. We were making room for it because of all of the U.S. elections and all the build-up military in the D.C. area. I mean, it was set up like a big Michael Bay movie, and it just didn't deliver nothing. It was very disappointing, actually. But eventually, the central banks will cause a displacement because they want interest in the marketplace. They want that transactional volatility to come in, and right now nobody's terribly excited to do anything, but we will see this short-term high or the short-term low taken eventually. And when one of those two happen, and at this point I don't really care, I just need one of them to do it, then it'll create a lot of interest, and that interest will create order flow, and that order flow will start to unlock what the market's going to reach for over the first 3 months of the year. And I give up the whole ground of January. I do it every year. I don't care what happens in January because I'm more interested in what happens in February, March into April. So over that rough 3-month period, that's what I'm trying to eye up. I'm trying to figure out what we're going to be doing there. I'm not trying to predict each individual day. I'm not trying to predict the weekly range. I'm not trying to do that. What I'm trying to get a feel for is what is the significant or intermediate term price swing that's going to unfold over the coming months. That's what I'm eyeballing on. And right now, it hasn't shown its hand to me yet. Now, you might look at this and say, oh, I think it's going to do this and do that. And guess what? If it pans out, then well done. But right now, I don't have that yet. And that's what I'm trying to communicate to all of you. So when it happens, you'll know, because I'll say, okay, this is what we have now. Right now, I'm giving you both sides of the coin because I don't know. And I'm honest and I'm telling you, I don't know. So until it gives me that indication that it's going to be one-sidedness bullish or one-sidedness bearish, then I have to give you two scenarios to study, but not on the basis of I'm right, see, In other words, I'm not going to come back and say, haha, look at this panned out. So there's a distinct observation I'm trying to press upon you right now. I'm not trying to save face. I sided with going with a lower euro last Wednesday's midweek review. Yeah. And a higher dollar, and we didn't get that. So right now, for some of you that have not seen me do something like that and get it wrong, it may feel uncomfortable. It may feel like, wow, it didn't pan out. I want you to remember that this is the month and this is a time of the year where you're likely to get it wrong too. So you have a choice to make. You either think that you're going to get it right and just press your luck and trade with live funds, or use it as an intel gathering time period where you're just waiting for more information. And we're only trying to teach you the best of the best. Each year, we're trying to bring your attention to times when the marketplace is so one-sided. It's like, it's easy. But right now, admittedly, it's not easy. It's not easy. I have no idea, based on this chart right now, which direction it's likely to go with a high probability. I'm only telling you based on the unwillingness of the dollar to get into the premium level, and it's had multiple attempts to do so, then it's probably going to resume going lower. And I'm going to go with that and study how we open on Sunday. And then we'll see what we get from there. But if we take out Thursday's high on the daily chart, then I resume with this idea here. So it's a lot of give and take and wait and wait and wait. And for those of you that are impatient, you just want setups and setups and setups. This is the period that will frustrate you. And then the weaker traders, okay, they will go in and plunge. They'll just simply go in and say, I'm just going to take a trade because I can't stand sitting on the sidelines. I need to be in here doing something. And if I take a loss, whatever. But you're not going to say that as you do the execution. You're going to think, what if I'm right? This is going to be so good. It's going to indicate to me and whoever else I share my result with that I have skill. And it's nothing here that warrants an invitation to get in and risk money, period. Okay, so let's move on into the hourly chart. All right, so if you're not ready, pause the video before I show the annotations. All right, so we had our buy side liquidity taken above here. Didn't get into the premium level as indicated on the daily chart. Small little gap in here. We already talked about that. Buy side liquidity ran up in there as well. We talked about that. We have a breaker here. All of these down close candles, they are a breaker. Continue that out in time, project it forward. Inside of that breaker, we have a fair value gap there. Trades up into it. Small little Judas swing on the 21st. And then the market trades softer. And sell side liquidity below this low. And all of this here, that to me, I think is a little juicy area where they're going to want to take the market down into. If it accelerates and goes lower, picks up steam, we can attack the sell side liquidity here. And then right here is where my eye is, at least for right now. The moment at the chart close on Friday, this is what I see. This is, in my mind, this is the amount of chart that I have considered. Okay, so what I'm doing now, where I have not done in the past, where I usually just talk about something here, there, I'm giving you the amount of data. When I look at the charts and I'm thinking about something in the charts or a narrative or how much of the price action I'm considering, okay? As for the dollar hourly chart, this is what I see. This is what I'm studying. And I want you to look at how we've had this breaker here. We trade up into it here, here, and we're sitting right here. Now, I'm anticipating a lower opening on Sunday. That's what I want to see. I don't have, and you don't have any control over what the market's going to do on Sunday's opening. You don't know. For, illustrative purposes, really, it could open up here and completely shoot the whole idea of looking for this out of the water. That's a real world event. That's a real time. This is what it's like when you're in the trenches doing it with live funds. You're going to be met with those instances where it completely does the opposite of what you thought was going to happen. And you have to realize that there's no avoiding that. That's going to happen. That's why you have to have money management. That's why you have to use stop losses, because you're not going to be 100% right. I'm not 100% right, but you don't need 100% right to be consistently profitable. But you do have to go through this growing pain of knowing there's times when you're not going to know something and you have to wait. And it doesn't mean you suck as a trader. It doesn't mean that your method sucks as a method. It doesn't mean that they changed the algorithm. Okay. It just means that this is normal business for January. Okay. It's a normal thing. If we get a lower opening on Sunday, I'd like to see it open softer, trade up and fill in the gap, and then start to work into the sell side liquidity pool here and below here and into here. And I'd like to see it happen, going into FOMC, but not quite getting into here, but using the FOMC to tag that fair value gap. That's kind of like what I anticipate for the week. So I'm kind of like forecasting and projecting a run into that fair value gap on the heels of FOMC on Wednesday. Okay, that kind of gives me the time frame of how long it would take for this from Friday's close to trading into the fair value gap. Does it completely trade fully closing in this, or does it go to consequent encroachment or the top, premium level of the fair value gap level, which is this one here? That's of no concern to me. But I'm looking at this overall price fractal, and I see a market maker sell model in a market that was decidedly weak. We couldn't even get to a premium. So we had a turn here at buy side liquidity, which is logical. We had a low risk sell here, another level of distribution, another level of distribution, and another level of potential distribution with the breaker. And then we should anticipate seeing it run out this sell side liquidity. But if it goes here, then there's all this here and this imbalance. So it could use what's on the calendar on Wednesday with the FOMC. Because think about it. We have Sunday's opening. If it opens like I'm anticipating, softer, fills it in, and just trades and drifts lower on Monday. And then Tuesday, we get a rundown in here and then some kind of a retracement, maybe, if it even does that. And then on Wednesday, it could use the FOMC event to drive down in here. And there you go. Now, if it was to do something like that, just so you know, and if it wasn't a week of January, we're still in the month of January, I don't do anything. I just completely remove my interest in trading live funds in January. I don't touch it. It's just analysis, intel, and then what I share with you all. If it were a different month, not December, okay, preferably in spring or fall months, then if it was to do what I just outlined here, that would be the week for me, and I wouldn't do anything else. I wouldn't try to forecast something else for Thursday. I wouldn't try to participate in anything on Friday. So it kind of like helps you frame the idea of what I see and what I would operate in as a normal routine. So I just said a mouthful there, and if you don't get what I just said, go back and listen to what I said, because I just basically framed out what I think the weekly range would do, how I anticipate the weekly range, what weekly profile. You match that up with what I just outlined, and I'll be watching to see if what I just said comes to pass. It might not, and I want you to understand that if it doesn't, it's okay, because it's during a month where we don't have a lot of probability. But if it's another month ahead in the future, and we're doing these types of things, you're going to see it helps you frame out and bring together what has just been compartmentalized lessons and illustrations now being brought to full high definition perspective. All right, so here's a 15-minute time frame on the dollar. If you're not ready, pause the video. And once again, here is that low risk sell, another level of distribution, another level of distribution with a fair value gap inside of the breaker. And to me, we cleaned up some buy side liquidity here on 2 passes, and it would be indicative of underlying weakness if we open lower. So that's the signature I'm waiting to see. If we open relatively unchanged, then we probably have to wait for Monday's trading. And then Monday's trading will give us some insights as to what it's likely to do. But I'm favoring the runs below here for the sell side liquidity and the sell side liquidity here, and then the fair value gap that I mentioned on that hourly chart. Everything that I just outlined thus far for dollar completely goes on the back burner and pushed to the side if we take out Thursday's high. Okay, so that way you have your line in the sand. Everything should remain as such unless we trade above Thursday's high. All right, moving on to euro dollar. This is our daily chart. If you're not ready, pause the video. All right, so here's what we have. The euro on the daily chart, as I mentioned before, we did not want to see any movement back above this rejection block. We had that. And we're working inside this up close candle prior to this move here. So we're inside of the bearish order block. But this and this candle, okay, you have to take that in consideration and project that in the future. And we might be accumulating there, okay, and maybe attempting to go higher and completely take out this breaker. If we trade with a large range into this breaker, then I don't see this as the top or intermediate term high that's going to keep prices lower. In other words, I would expect this to eventually be traded through, and that's in alignment with the weaker dollar. So that would kind of like balance each other out for a market symmetry that would be expected. If we're expecting lower prices in dollar, higher prices should be seen in euro dollar. But we still have this breaker here. So it could trade up into that breaker and then be met with stiff resistance, and they may reject that harshly and then work towards going into this daily fair value gap and or filling up the weekly fair value gap, and then being mindful that we have that order block here at the low end. That might give us another bounce up into the 120.25, 120.30 level, and not coming back to the low here like classic support resistance theory would teach. Like if this is eventually taken out and trades down, I wouldn't necessarily need it to trade back up there. I wouldn't need that. I would be focusing over here on the fair value gap levels and not this low or this low. I would use this here if we were to trade through it and come back in and use this area once it's been balanced, and that will be treated as a balanced price range. And you'll learn about that, and there's much more to teach about it as well. So again, I'm favoring initially going into Sunday and Monday and how we could project into that weaker dollar on FOMC. And that might set the stage for a run above this area in here and clean up this little pocket where we have this one single candle down. So think about this candle's low. It might need to get up into that area, and that in itself might top euro. It could, but I'm not trying to forecast that far ahead. I'm only trying to get a feel for what we're likely to do going into FOMC Wednesday. All right, the hourly chart on euro. If you're not ready, pause the video. All right, so here is a fair value gap in here. That's on the upside still. And I want to take your attention back to the midweek review where I said, okay, I'm just going to co-sign and say, I'm going to wait to see if we get that lower euro and higher dollar. And price was trading right there. Now, right away, the market does this. Is this in alignment with what I was outlining? No. So when the market starts to give you this, what is it doing? It's displacement. It's small inside the scope of this high to low. It's trading up, but it's moving away from this rejection block. So it's giving more support to what? Near-term, short-term order flow is bullish. I gave you the buy-side liquidity pools that I felt that were salient. And if I'm wrong, that's where the price is going to go. But I called and sided with looking to see if the euro would go lower. And there it is. Now, let's play devil's advocate and say that was your view and you weren't listening to me on Wednesday. Okay, in other words, say you came to that conclusion on your own. How would you go into your chart and annotate that and not beat yourself up and do it constructively. Well, in areas over here or over here, you would simply type out things like the market continued to move higher, and this displacement creates this run here, and then we drop back down into this fair value gap. So we have displacement higher, negating any weakness that would be expected. So we have seen more movement from the rejection block, so therefore the buy side liquidity is going to be attacked. So this is where the draw on liquidity is, here and here. So when it creates this small little fair value gap and it's running, this drop back down creates the optimal trade entry that you could use to frame a run into this buy side liquidity pool and this buy side liquidity pool. You're using the benefit of hindsight to fill in the experience that you didn't actually participate in gleaning as the market traded there. So you go in and you record it as if you saw it, and over a period of time your subconscious remembers these things. And I mean, clearly your chart and your videos had these levels indicated. I only gave you what I think was going to likely happen, and then there it is. And like I said, if this happens, it's a move I'm not a participant in. That's fine. And it's also the same if it would have went lower and traded into the levels I was anticipating for euro. It still would have been a move that I didn't participate in. So there's nothing to weigh out in terms of importance, or it's not paramount. So what are you left with? How do you use this information? You annotate your chart, leaving areas like over here and here where you can type in nothing that says, I was wrong, I'm so angry, or I'm frustrated. You don't want to use buzzwords like that, because if you do that, like I mentioned many times, you are feeding your subconscious with charts are bad, charts are harmful, making decisions and doing analysis and forecasting is painful. That's what you're teaching your subconscious. So what will happen is you'll start looking at charts, and it'll be easy for you to be distracted. You'll start thinking, okay, I'm looking at the chart right now, and just when you think you want to have a trade idea or map out an idea, you'll start thinking, you know what? I'm getting hungry right now. I'm going to go and grab something to eat. And then you go to the refrigerator, you start grabbing something out of there, and you say, oh, what's on TV right now? Click. And then all of a sudden you just completely abandon doing what you're supposed to be doing, which is committing to learning and studying price action. Some of you are laughing and nodding your head because you've done this before. But if you haven't, trust me, things like this will start creeping in. And it's because you are feeding yourself negativity. It's not brainwashing in a negative sense. It's brainwashing yourself with positive self-talk. Okay? It's a real clinical thing. If you have ever suffered with anxiety, okay, if you go to see a physician that will work with you, a psychologist or someone that would be a counselor of sorts, one of the things they do is they teach you a concept called self-talk, which means you're canceling out all negative thinking and language. And if you feed yourself negativity in your charts, in your annotations, or you're reviewing certain things, if you look at a price action move and you say, oh, I knew that was going to happen, oh man, I missed that. Think about the level of emotional connection that you've now presented that move, and you didn't even trade it. You didn't take any risk there, and you didn't make any money. So why are you foolishly putting so much emphasis and emotional response to something that you didn't participate in? Now, I'm beating you up if you do that, because I want you to know what you're doing is wrong. It's fixed and corrected by doing what I'm telling you to do here. And because you're doing what I'm suggesting you do here, by only putting in unemotional but positive when it's possible in your annotations, your brain takes that in, your subconscious takes that in, and fills in these voids of experience that you didn't really have by watching price. And what it does is it tricks your brain into canceling out any negative stimuli around the event. And it lets in pseudo experience. So it teaches your brain to see something as valuable. What is it that's being presented here as valuable? The buy side liquidity pools were drawn to. Okay. We have a fair value gap. The market didn't drop. It went higher. So when it created this imbalance here and it drops back down into that, are you thinking at the time it was doing this that it was going to go higher? Probably not. But you don't want to go into your charts and annotate your charts and say, I missed this optimal trade entry. I'm stupid. Oh, it was obvious. Why? How did I miss that? You see how piercing that is, how negative that is? And many of you do that not by annotations because you just aren't putting that much work into this, and that's the type of stuff you have to do. That's what I'm telling you. It's expensive. You have to put the work in. The work is doing what I'm telling you to do right now, filling your charts up with annotations and observations, and you condition your brain to see these things over time. And then as you watch it real time, you'll start seeing, oh, what I'm anticipating isn't likely to unfold. So what's the benefit of having buy side liquidity pools identified on your chart, even when you're bearish? You just saw it. You watched it pan out this week. Now, some of you are probably thinking, oh, you knew this was going to happen, ICT, and you're just doing this as a teaching tool. No, I genuinely gave you, I wanted to see Euro trade lower. I wanted to see it erode this and get through that discount array and make an attempt to get below here. I wanted to see that. That's genuinely what I wanted to see. But in the event that I'm wrong, that's okay. You're going to see me get it wrong again. It's going to happen. But how do you use that information? You take the information that was supplied in your chart. Here's your buy side liquidity, and here. And if it's not dropping and it's showing you a displacement on the upside, you wait for the same signatures that you would anticipate seeing a normal if you were bullish. This is a fair value gap. It's needing to come back down into that. So the range high and the range low for optimal trade entry, and you'll see that when we get into the 15-minute time frame. It trades into that with a fair value gap. So we have, this is a potential area for a buy, and you annotate your chart like you saw it live. It seems foolish. It seems artificial to the degree that, I'm faking it. I'm faking it. I'm faking it. Well, if you think about it like that, you're giving it a negative context, and your brain's going to see it like that, and you're not going to glean what you should have as pseudo experience. Your brain will literally be tricked into believing that you had experience taken from that with no hardship. None of the negative things, only the positive is being withdrawn from these events. That's constructive study. That's the work that you do. Nobody wants to watch my videos on YouTube. And many of you in here have probably been just watching these videos here and letting me do all the jawboning and leg work, and you just work with what I say, and you don't do anything in your own charts, and you're wondering why you're not learning, wondering why it's not clicking for you. You have to fill in these voids in your understanding with observations that you log every single day. That's how you do it. And I'm giving you pieces of that, but when we start the first trading day of February, I'm literally going to give you observations that I have, and I'm putting them in the chart. So I'm doing this same structure here. I'm giving you a blank canvas saying, okay, you do what you think you see in your chart right now, and think about whatever annotations you would have. And then when you unpause the video and you see my annotations, don't use those and just, okay, that's all I'm going to worry with, because you're cheating yourself from development. You're not going to condition yourself to do this, because I'm not going to do it in 2022. I'm only doing it this year. If you don't participate and do the things I'm telling you to do, you're wasting this entire year, and you will not learn as much as you would have if you do everything I'm telling you to do and try not to do the things I tell you not to do. It's a default result. You're going to get it, but you have to do these things to get it. Just watching the videos, because think about it, everybody could just simply watch the videos on YouTube and get it, but they don't. You have to do the things I'm physically teaching you in this mentorship, period. That's the only way you get it. Having friends share videos, and maybe you came into this mentorship and you had some pieces of the mentorship given to you or shared online, and it still didn't click, okay? Because you weren't mentored. I'm telling you exactly what you're supposed to do. And if you do these things every single day with us, every single week, and work within the context and the framework that I give you, It will happen. But just watching a video, just clicking in and watching like it's a Netflix video isn't going to work for you. It isn't going to work for anyone. And that's why lazy people comment critically about me, because they have not put in the work. They think watching the video is the work. And during these long-winded rants, that's expensive to them. It takes a lot of time to get through that. But I'm telling you what you need to do. And if you do it, you will get it. And then when you watch the charts live, it'll be like, oh, I was expecting this, but this is what's happening right now. And then you transition to, I'm reading price live right now, and what I thought was going to happen doesn't look like it's going to. So I have an opportunity here with a potential buy to run into this right here. So what is that? This is a setup that's in alignment with the longer term perspective. That's we've held a bearish dollar long term, and long term bullish euro, and long term bullish cable. Nobody's going to say that isn't true. That's exactly what has been proposed. And I mentioned anything in this upside move on dollar was just a near term retracement that could just reach into a short term premium that eventually would evolve into a continuation on a lower end for a weaker dollar. I'm not terribly bullish on dollar, and I've made that very clear. You can go back and listen to the videos the last couple of weeks. I'm still bearish dollar, but I have to work within a short-term context when the market's presenting it, because you're learning from me. In this instance, this is a setup that it indicates that no, there's no weakness here. It goes higher, and it creates an imbalance here. So when it drops back down into this is a setup that is in alignment with the longer-term analysis. So this is where we get this tug of war. And I get a lot of emails where they'll say, and this is coming from mentorship, because I really don't spend a whole lot of time answering emails from people outside the mentorship, unless it's something complimentary, or if they're saying like, I really appreciate what you've done on the YouTube channel. I'll usually say thank you very much for taking the time, and smiley face, and there it is. Keep me abreast as your development continues. That's it. But mentorship, students, they'll send me emails, and it's usually the first couple months of mentorship, like 5 months or lower. These types of questions will come in. I'm looking at the charts, and I know that the commentaries say you're looking for this, but would you have taken a trade like this or that? Well, to answer that, and also to remind you that your unique model may many times be opposed to what I'm outlining in the commentaries. That does not mean abandon or don't study what I'm outlining in the commentaries, because you're going to find that I'm more right than I'm wrong. But I'm going to be wrong. The wonderful little aha moments are going to be where I'm outlining what I think is going to happen, and I'm wrong. But your model, because you're focusing on what I teach is in terms of the highest probability setups, which is higher time frame setups with order flow in your favor, which is what? Lower dollar and higher euro, higher cable. So in those instances, this setup for some of you is the choicest of, ICT called it lower, and my model called this. You see what I'm saying? So it gives you that, I didn't fall victim to listening even to my mentor's opinion about how he would frame a setup, and I was able to find something in the price action, and it delivered to the buy side and the buy side here, and it offered me a setup. I'm speaking hypothetically. So that's the benefit of sticking to developing your own model, but still considering the lessons I'm providing, because I'm not going to steer you wrong as a consistent diet, but I'm giving you context that hopefully you'll appreciate over time. If you just look at simply 1 week or 1 month out of a year, then it's too myopic. But for those that have been here, for instance, like since 2016, 2018, and maybe even 2019, by now you probably have a model that you saw this and you watched it deliver, and you're probably thinking in the back of your head, hearing my voice saying, okay, I'm going to side with the euro going lower. And that probably felt amazing. And that's the lesson that you get if you stick with your model. Don't follow me blindly. If you see something in your development that makes sense to you, and it's repeating, that is your niche. That's the thing that you start mining. And if I say something that's counter to that, Consider it, but don't abandon your own observations and study, because you're going to excel faster in your learning and you'll grow closer to your model by phasing out all outside interference. And again, that's the signature of graduation. Now, obviously, you're not going to graduate if you're month 5 or 6. There's so much stuff to still learn, but it will allow you to graduate to a greater level of appreciation for your own individual prowess, your developing skill set. And it's just such a reassuring, like, oh, it's a like, I can't, there's a word I'm trying to reach for. It's escaping me. It's just a confidence booster. That's kind of like basically what I'm reaching for. It just makes you feel like you got a peacock moment. And there's nothing wrong with that, because this is hard stuff. This is so hard. When you're learning to do this, it feels impossible. But when you get it right, and if everything around you says, and even me, maybe indicating something else happens, and you stick to your model, and it delivers, that right there, I don't get offended by that. Like, I've had people in the mentorship from 2016 group say, hey, look, Michael, sometimes I go against you, and it hurts, but sometimes I go against you and it pans out. Is it wrong for me to feel good about that? Laugh out loud. No, that's good. That's absolutely, because you're being an independent thinker. And that's all I'm trying to cultivate in all of you, is to not rely on me, not rely on anyone else. You can do this on your own, but you're going to do it with losing trades too. That's the part that's uncomfortable. That's that, I don't want to hear that word. Don't talk about losses, Michael. Don't talk about getting it wrong, Michael. That's just not, you're killing my buzz, Michael. We were feeling good for a moment here. Now you come in here with this. But that's reality. And when you understand that those losses, those misconceptions about what you think is going to happen in price, when that happens, you don't abandon your model. You don't abandon your concept, the things that you know and learned. You give yourself permission and say, okay, that transaction or that idea didn't pan out. I'm going to go on to the next one. If you spend time festering over this incorrect assumption, then you're going to poison your mindset. And your mindset is where all of this begins. Before you even pull the chart up, if you're honest with yourself, think about when you took live trades. I guarantee you, before you turn the chart on, you were probably pissing and moaning about something. Because I can tell you, there's lots of times I did that. I was angry about something, or I was depressed about something. I said, you know what? I need a buzz. I need to feel good. I need to go in there and take some money from people in the S&P market. And guess what happened? I ended up paying somebody. Okay. So before you even begin to open up your charts, you got to balance yourself. Don't go into it with, yeah, man, I had a great day. Everything's going good. I want it to be a cherry on top. I want to go in and take a trade too and make it even better. You're inviting the same thing, and it could potentially ruin an otherwise good day. You got to go into your analysis without any emotion. And the way you continuously work in that mindset is you feed that in your annotations and in your logging of your charts every single day, every time frame that you work within. And I give you the daily, pulling in weekly and monthly levels, but then the hourly chart and then the 15-minute time frame. It doesn't need to just simply be those time frames, but I think anything more just compounds the amount of work and you won't do it. Clearly, you can see the daily, hourly, and 15 works, but it's not limited to that. It could be just as easily a daily 4-hour and 30-minute. Whatever cleans up your chart that shows you very obvious PD arrays. Like if we looked at this 15-minute time frame in the next slide, it may not be as clean or nice as a 45-minute chart or a 20-minute chart. Okay, and TradingView, depending upon your level of membership in there, it'll allow you to do certain changes in time frame, and you can create it as a time frame you can just click on and go right to. But as a standard, every platform, because I know some of you don't like TradingView, you want to use your trading platform, and some of you have stayed in MT4. I had to move away from that for obvious reasons, but the thing is that hourly, daily, and 15-minute time frames are pretty much universal. But when you have your charts, you want to have your charts set up in a way where you have areas where you can have annotations. Okay, I leave this area here to inspire you to kind of like frame your charts and the perspective you're working within while looking at them, it leaves room for you to leave annotations and important markers for you to glean, so that way when you're done the full week, you go back and you review your charts. And you're reviewing them, reading things that you put in. Now, they may be observations that you watched at the time live, which are real measures of experience that you got. Or, by the benefit of hindsight, you're tricking your brain with positive self-talk. Okay? And in February, like I said, I'm in my charts, I'll have little areas here where I'll have annotations written. Now, I already know that this is the part that people are going to abuse. Okay? They're going to abuse it. They're going to be sharing it on social media. They're going to be posting this stuff over here and there. Okay? They're going to give it to their buddy, and their buddy's going to say, well, I'm going to share it to somebody else. And then it's going to go all over the place. Okay? I know that's going to happen. Just like lessons from 2016 group, okay, got pushed around. Okay? I understand that. I am not going to be able to stop every person in here as soon as they start doing it. But I want you to understand something. All of this stuff, this level of delivery of teaching it, it ends this year. And then we're just going to be a community in 2022 going forward. Now, I'll teach, but I'm not going to continuously keep doing this. So for some of you that, want to make a side business out of what I'm doing, okay, you won't have that forever. And that's why I'm only doing it for a short period of time. But I am pouring myself out this last year. I'm literally giving you my all. I'm giving you my best. You're not getting Enigma. I never promised that. But you're getting everything that I am willing to teach. And you will have every advantage. If you have any respect for me, you won't do these types of things. Eventually, you will get caught and get thrown out of here. But why these people want to do this? They want to play Robin Hood. And to me, I get it. You want to feel good about yourself, okay? But what you're doing is you're disrespecting, number one, me, the level of commitment I've given to this community, and also what I had to endure to get it. And you think it's just a harmless little thing. Oh, I'm just sharing a screenshot. It's not even the full video. It's the same thing. It's the same thing. And I can't tell you how many times I have told my wife, I'm not teaching this, because this is what goes on. And I don't want to feel that way. You paid to be here. You paid to be here. So when you make your videos available to other people, you're diluting not only your investment, but everyone's investment. Because it just makes me not want to do these types of things. So is it going to be something that I change my mind about in mid-year? It might be, because of something like that. I might change course and go a different direction. I mean, this is a mentorship that is very interactive. You just don't realize how interactive it is. But I don't want to be the mentor that I am right now in 2022. I want to be the mentor that encourages you to, that what you've been doing and high-fiving you in the forum. That's what I want, because I am pouring everything into this now. The only thing that would be required beyond this is to sit in front of you with a live chat room with my charts live and pointing to everything as signals. And I already told you I'm not going to do that, because that would absolutely be abused. Everybody out there would have Zoom channels posting what I'm doing live and selling seats to get into it, okay, for $10. Okay, that's what would happen. I'm not going to do that. I'm not making myself available to that. And that's why I told you and you enrolled, there's no more live sessions, because that's what was going on. That's why I stopped it. That's the stuff that was going on. They were doing go-to meetings and such, and all they were doing is rebroadcasting what I was doing live. And that's why I stopped it. You don't know that. You didn't know that, but you know it now. That's why I stopped. So why am I going to give them a platform to do that? So the folks that were doing stuff like that, they just resorted to just sharing my videos and selling them. And then other people just started revamping them, repeating what I say and try to create the charts over and over again. So there's always going to be that. Okay, I'm not going to be able to stop everything, but I want you to know that those individuals, and some of you are still in here, you have really reduced the level of content that I really wanted to deliver, and it just didn't make it as pleasurable for me as a mentor, because that's what was going on. And I'm sure some of you know it and feel it. But I don't want you abusing, and I've said this every year, and still there's always a half a dozen of these people in here. And I'm sure that with this number of people that's coming in on the 27th, I'm sure there's an army of them. Okay? Just take the lessons, absorb them, and try not to think, well, I'm going to sell it for this over here, or I'm going to share it with this because I feel like I'm a nice person and it should be, public knowledge. No, it should not be public knowledge. It should not be. I've had this for a long, long time, and I did not want to teach it for a long time. And honestly, if I'm being 100% honest with you, there's some days where I have to ask for forgiveness because I tell God all the time, I don't want to do it. I don't want to do it. And he reminds me that I made a promise and I have to continuously do it. And as long as I continuously do that, my life is blessed. And you think it's just the money you send me. No, I'm right in trades. I'm right in the way I live healthy. My personal life is balanced because of what I'm teaching you here. I am not focusing on the negative. I'm not. I'm focusing on the positive. I know that these lessons are reaching the majority of you, and you're receiving it in good character and in good spirits, and you honor it. There's always going to be tares amongst the wheat. There's always going to be these little rocks in your shoe. That's always going to happen. But these same people will never, ever, ever be able to do this profitably. And they have to do these things to make themselves feel better about themselves because they can't do the work to make themselves profitable here. Not because it doesn't work, because they don't have the character to do it. They don't have the wherewithal to go through the process. So if you do these things and you ferret out the positive and you filter out the negative and you annotate your charts like that, you'll see that that same application should be done in your own personal life. Get rid of friends that are toxic. If they're telling you you're not going to learn this, you're wasting your time, stop talking to them. If your spouse is like that, stop talking about it to them. Doesn't mean get rid of them or divorce them. It just means don't expose this to them. That's all. Just control it. And if you feed your mind positive things while you're going through your development, it will be a faster process for you. It'll be a smoother process and a much more enjoyable process. And that's really key. It needs to be enjoyable. If you don't enjoy it, if you don't enjoy logging your charts, you're probably never going to be able to do this. And that's the truth. Like, I loved doing this. And right now you're probably saying, get on with it, get on with it. This is it. This is the thing that you need to learn. This is the thing that you have not been doing, and that's the reason why you're being held back. You are not doing this correctly. And it's not the first time I've told you to do it. I've told you in the free content before I even started this mentorship. You have to do these things. But you don't want to do it because it's a routine. It's an obligation on your part. It's a exercise of discipline. And none of you want to submit to that in the beginning. And that's a normal thing, but you have to press into it. You have to do that or it won't happen for you. Period. Nothing and no one is going to fix that for you. You have to endure it. And over time, just like when you got on the bicycle the first time, you get on it, you're scared. You're going to fall. You might skin your hands up. You might skin your elbow up, your knees. What happens if you break a bone? What if your girlfriend sees you fall? How embarrassing. Or vice versa. You get what I'm saying? This is no different to any of that. But it's so much more difficult because you are competing with you. The same weak person that doesn't want to commit to the things through discipline that will make them successful, you in that weakened state, and I was weak too, you are strong enough in that weakness to keep you from getting to where you want to be at. You're allowing all these little subtle distractions to say, you know what, there's something else I can do that's more entertaining than this. Something else I can do, because this is uncomfortable. I don't want to be talked to like this, Michael. Stop talking. This makes me feel uncomfortable. I don't want to feel this way when I'm watching a video I paid for. I'm telling you that this is a normal thing, but you have to correct that or you will not develop. Period. No ifs, ands, or buts. It's the way it is. It's not because I said so. It's just the natural order of things. Our brains are highly, highly sensitive. And what you feed it sets the tone for conditioning. If you condition yourself to be negative and only focus on the negative, then what are you doing? You're inviting defeat before you even really got a chance to get going. So you have to fill your charts up with not sugar, okay? It's not all highs and high fives and rainbows and gumdrops, and it's not like, you shouldn't be getting a diabetic coma reading your charts. Okay, that's the other side of the spectrum. It needs to be pulling out the things that are salient, giving yourself constructive criticism, but do it subtly. Not a lot of emojis and, craziness and stuff like people share in their charts on social media. So anyway, I went a little bit on a rant there, but it's good stuff. You need to know that. So anyway, price ran the buy side liquidity. If it does continue, we have a small little fair value gap in here, and the breaker could be retouched to it as well. But we'll see what happens. I think it might still try to trade up into the breaker and maybe even run above here, which doesn't have an annotation now because I want to see what we do on Monday. What I don't want to see is, again, I don't want to see Thursday's low violated on euro. Otherwise, the idea of trading up into the fair value gap and this breaker is nixed. All right, so here's the 15-minute time frame on the euro dollar. If you're not ready, pause the video. All right, so here's the buy side liquidity pool here. And this is that low to high. This is that dealing range. Once we had displacement on the upside. See the energy it had here? While we were sitting here on this midweek review, last time I was doing a commentary, then we had this. So what did we get? A very short-term displacement to the upside with buy-side liquidity outlined in advance. So you knew this is where buy-side was residing. The market drops back down into on a Judas during the London session. So it drops down, creates an opportunity to pick up the liquidity that was inside of this fair value gap. All of these down close candles, I don't have it lined up because I want to be able to talk about it in addition to what you see here. But this is the optimal trade entry levels from low to high. So that's what's here, these dotted lines, or dashed lines rather. That's your optimal trade entry. Inside of that, you have a fair value gap with a Judas swing. So on charts like this over here, you would say the market had a clear Judas swing down into a fair value gap, moving to a discount and order block, which set the stage for a run into the buy side liquidity. Then you can do like 10, 20, 30 pip grades above this buy side liquidity pool, and you can see how it mapped out a run into that here. Okay. And now we're going to run into cable. All right, again, I'm not going to spend too much time with this one. I anticipated this to continue higher, but before we show the annotations, pause the video if you're not ready. All right, so I want you to go into your own weekly chart and find this weekly fair value gap. That's obviously pretty easy to see with using these prices here, and you'll see it right away on the weekly chart. I think that the cable market, if we do get a weaker dollar, cable will probably want to press up into that weekly fair value gap. Does it just hit the discount end of the weekly fair value gap and stop there, or does it press into consequent encroachment or the full closure? I don't know, but I know that this is a draw on liquidity. I mentioned that we were going to run above these relative equal highs again. We did that on Thursday. Traded a little bit softer on Friday, which is normal, but this currency is just punishing short sellers, and I mentioned this many times, and I don't think we're done with it. All right, here is the 60-minute chart on cable, and it's blank for a moment. So if you're not ready, pause the video. All right, so here is the order block, and it traded down into the last down close candle here. We had accumulation there, and then the market traded off of this order block there, and you'll see when we get into the 15-minute time frame, it had a projection block in there, which I'll draw attention to once we get to it. We had relative equal highs left. We have low resistance liquidity run signatures still in play. We have a lower high to the right than that of the highest high. So if we do continue higher and a lower dollar is the delivery for this week or the coming days, then we will probably want to run into this. I already mentioned I think 38 is possible, and if we start really getting crazy, 39 could be traded too on cable. I don't want to trade it. Like, I don't want to touch it. I don't trust it. Okay, because I know as soon as I get into it, they'll be like, okay, it's time to sell off cable. So I don't want to touch it. I've been calling it higher, and I've been telling you it's going to keep running out buy-side liquidity pools for those that are trying to sell short. That's still what I see here. Okay, I don't see any difference there. If we take out if we take out Friday's low on this one, why? Because we already have structure in with the order block and willingness to want to go higher. Okay, so we don't want to see it go back below here. So like everything else was Thursday's low on euro and Thursday's high on dollar. Those are the lines in the sand for those respective currencies. I'm electing to use the Friday's low on cable because the framework that's being shown here and the market structure that's in play. So right now I'm thinking here, buy side liquidity, that's where I'm wanting to see price trade to, and I'm predicting and projecting with a forecast that FOMC probably will be the catalyst that sets us up into here. All right, here is the 15-minute time frame on cable. If you're not ready, pause the video. All right, I'm going to give you a new lesson here, and this is something that's important because you'll see this in the future many times referred to. Eventually, when you get into content, you're going to come to a lesson, and it'll be rejection blocks. And that obviously is not all there is, just like every other lesson has not been fully explained or illustrated. They're just introductory lessons. So many people think that they got the content, they got the mentorship, which is they have those lessons. And then they discover by going through them, just like charter members did, they go through them, they feel like, I have a lot of information, I know what I'm looking at now, I just can't put it together. Right, that's mentorship. That's what I'm doing this year. I'm bringing it all together so that way everybody knows what they're supposed to be doing with it. The idea of a rejection block, okay, is founded on a single swing high or swing low turning point. If you have a run that goes to a low and then runs through it, like we have here, okay, we have a low and then price runs lower, okay. When we have that framework, we want to consider that first low. This is all stop running, okay. You want to go back to this lowest down close, whereas anyone that simply watches my videos and talks about rejection blocks, it would be considered that this would be a rejection block. It is, that is a rejection block. But from a signature standpoint, you have to look at the logic. What's going on? You have a low, then it runs lower and then runs away. So what did it do? It ran the low out here. So what was the real low that they were working off of? The initial low. And this was manipulation, so you had to go back into the narrative and what is it that's being suggested here? This initial low in that close, the lowest of them in that swing, that is your rejection block. This is a rejection block that can be sensitive, but whenever there's an instance where you have a low and a lower low and it runs away, the stop run, just like when we look at wicks, okay, for instance, when we were looking at the 2016 election, it created this really big wick. And if you go back and look at the charts around that time, you'll see I say, disregard that big wick because it was all runs on liquidity. And you take that out of the equation and your chart becomes really clean and it's easier to see what's going on. We do that a lot. If there's big long wicks, we phase that out because that's a gap. Well, in this instance, we're seeing a run on liquidity that turns the market higher. That down close is your rejection block. Cancel out this low here and the necessity of using that one and frame your logic on this one. If you project that forward, you can see that that's what we ran into here. We hit that rejection block, didn't go down to this one, and then we have this run here. Inside of this low here was that bullish order block on the hourly chart. Well, when we reduce it again, now we have an order block here, which is a projection block, which digs into the last down close candle, but only goes halfway in, which is what you have here. You don't want to see a bullish order block on top of another order block go in beyond 50%. In other words, if it breaches the mean threshold on a closing basis, then it's not likely to be a high probability projection block. Now, if you're new and you're part of the group that just came in on January 27th, 2021, these are lessons that you will learn. I think, if I'm not mistaken, off the top of my head, I think it's in month 4's content. It gets introduced. I'm teaching you more here that you don't know about just by having those lessons. So by combining the rejection block, and then you had the mean threshold of this last down close candle, which is here, overlapping PD arrays in the form of a discount. So we have, the logic is that this market should continuously punish short sellers. It's going down to areas where it's picking up orders to go long, and when it does, it should reach for liquidity that or break premium arrays. In other words, bearish order blocks should be broken. Bearish breakers should be broken. If you see those signatures going forward into Sunday's trading and Monday's trading and Tuesday's trading, then we are looking for this area here to be traded to. If we lose Friday's low, then none of this is true, and we're probably going to see a higher dollar. All right, and that's going to be the discussion for that. And all of this stuff here is obvious framework for the order block. We have a fair value gap, but it's too small for me to annotate in here because this is the smallest font that it'll let me do. And I don't want to add, additional text with the slides, because sometimes my slides will end up having ghosts or images. It'll create artifacts in new slides. And because my eyes are not as they're not as strong, let's say it that way, as they used to be when I was a younger man. So I'm not as astute visually as I used to be. And that's why the previous video, I made an annotation on our forum, states that for the last two groups that I did the rendition for, or the user groups, your user group may not have a gap in the last couple minutes of the midweek review. So if you did, just know that what I was editing out was a sneeze, and when I sneezed, I have to go back in and take that little thing out. Sometimes someone will knock on my door. Sometimes my wife will holler, hey, you got a package, or the dogs will be really carrying on. Sometimes they'll bark and I'll leave it in the video. But other times I have to go back in and remove these little things that it's not pleasant for you to hear as a viewer. So I didn't put the piece of the cut of that video over when I was changing the watermark. And two user groups reported that there was a small period of no sound, no visual, and then it resumes again. That's only because I didn't take the two pieces and put them together once I was updating the watermark. So anyway, I'm giving you more information you probably really need to know, but I just make sure that you know that that was not something that was a glitch on purpose. It's not something wrong with the server. It's not something really technically wrong with the video. It's just a human thing on my part. I didn't put those two pieces together. So I apologize for that, but if you go back and watch the video, you'll see the last portion of the video. It really wasn't all that much left. But once I make a video and it gets uploaded to the server, I never go back in and edit, ever. I'm either right or I'm wrong, and it is what it is. And sometimes you're going to see a video that has an artifact in there that creates an issue. And I think, like I mentioned before, in August 2016 content, part 2 of one of the videos, there's a little thing in the video that creates the video timeline way longer than it really was. So when the discussion part ends, that really is the end of the video. There's nothing else that you're missing. I'm not having a video that has something that should have been taught to you, but you can't access. It's not technically broken. It's not like you can complain and say, oh yeah, I didn't get what I was. That was all there was to that video. So that's why I tell you, it might seem unprofessional to some of you. Say, well, you need to clean that up. It's I'm paid for this. No, it's transparency and it's honesty. Once I give it to you, that's it. I don't go in and fix it to make myself look better. I'm human. And if I do it wrong in my analysis, I'm there. I'm co-signed. I can't change it. I'm not going to go back in and fix it, especially now. There's too many user groups and too many versions of it. So it would be stupid for me to even try to do that. So again, it's just honesty. It's 100% transparency, honesty. And some of the things that I could do that you may think is an improvement may actually become a hindrance on me. And sometimes suggestions have been made to me, like for instance on my YouTube channel, adding the date and timestamp, which I thought was automatically happening, but I discovered obviously by looking at it when I was doing a video, it didn't. So I'm trying to remind myself to do it. And you know how it is if you use social media, you become accustomed to anticipating things just being done for you. And I fell victim to that. And I wish I could have had dates and times placed on some of the posts I made on my community tab, but it's close enough when they say 6 months ago, 3 months ago, whatever. They know it was back then, not just right now. But anyway, where was that here? The order block, fair value gap, no annotation in there, but there is a fair value gap there. Hits it, runs, then displacement. And then we have the order block here, fair value gap, trades back down into the old highs in this area over here, in this area over here, in this area over here. All through here, what do you see? This fair value gap. This is why it's not supply and demand. Take these levels and check them out in time here, and we're seeing it pick up here with this imbalance too. Just like we had sensitivity of it here, there, and drops down. We came to this area here, stopped in that fair value gap, came down, picked up the order block, displacement. So it runs through this old imbalance. When you have your charts, and here's one of those moments when you need to be paying attention to, okay? In your charts, you want to have a chart that only keeps reference to old fair value gaps. You don't have any other annotations on it. You don't have order blocks. You don't have breakers. You don't have support and resistance lines. You don't have anything except for fair value gaps. And you want to keep them up to 60 days. Oh, those IPTA data ranges are suddenly starting to make a little bit more sense, aren't they? Oh yeah. You thought I taught everything. I didn't. But you will start to see things if you have your chart only showing fair value gap and extend them in time, and they expire at 60 days. Then you don't consider them anymore. Then you take them off your chart. Now, you're going to have a whole lot of them if you think that you're going to be putting every single time frame. So you want to have a chart for your 15-minute time frame that the salient fair value gaps are on. You use that, and you're going to start seeing things in price action that you did not notice before. I'm giving you pieces and pulling out all the salient points. But when you start doing this on your own, that means the expensive time investment you have to have by putting in the time and making your charts dressed up like this. When you do these things, you're going to see all the critical turning points, all the reaccumulation, the redistributions, all these major significant price moves are happening around these imbalances, because that's the real support and resistance, folks. That's it. That's the real support and resistance. When you add other things to these areas, then you get really precision entries and logic behind narratives that you would otherwise never get by reading other books and courses. So anyway, just toss that in there for an extra charge. We have the order block here, rallies, and we have consequent encroachment. It trades down to from this candle's low to this candle's high. So it goes to about midpoint of that. We have order block also here, support, and then we have a small little fair value gap there, consequent encroachment, and then runs. This is your breaker prior to the run into this buy side liquidity. Okay, this is the breaker. Extend it out in time, cut through this, and here you go. Almost perfect delivery and displacement. Rallies back up, Now, remember I was talking about the idea of how we take out long wicks because they're gaps. Trust me, if you're new, that is taught. It's taught in the commentaries because that's where the bulk of all the lessons are. Those lessons that you're seeing at the top of each month, they are just introductory. These videos are the real meat. This is where you get it all. It's not, I'm adding extra lessons on top. No, it's the commentaries. It's the listening to all this and pulling things together. That's why you can't get, show me the video where it talks about the buy side imbalance, sell side inefficiency. No, there isn't any one particular video. It's part of. That's why you have to be mentored. There's no, this is all there is to it. It's taking it and putting it in real world context. That's how you learn it. You can't just watch a video and say, oh, this is all you have to watch. And that's it. And it doesn't work that way, folks. That's why people get frustrated here and they quit. But I've already warned you ahead of time. You need to be mentored. You need to be shown these things. Well, what you have here is you have a big wick or tail on this candle right there. If you take that out, just imagine that not being there and just focus on the body, okay? You have a SIBI here, a sell side imbalance, buy side inefficiency. Market trades up into all of this and it runs lower. You have to look at wicks and tails and cancel them out. Just not every time, but within the context. What's the context here? The market breaks this low, back up to it as a breaker, breaks lower, we have this wick, and then it went back down through it again. So we had a double run in this price action with this candle here. So we went down one time, came back up, and then opened and went through it. That completely negates the necessity of looking at this candle's tail. So if you take that out visually, this is why a lot of these things can't be programmed. I have a lot of people that are program savvy, they're quants and all kinds of, very, very brilliant people. There's so many things that I'm a coder. I know how to code, that you just simply can't make room for all of it. And the brain that you have between your ears is much better. You can see things, you can weigh things out. And this overlap here, when it runs down through it again, go back to the previous wick and cancel all that out. It doesn't exist. Think of it like that. Okay. This was a gap. It runs down, then it opens and runs back through it again. When you have that overlapping of price, but it does so over top of a tail or over top of a wick, okay, the top end of a candle, you take that out, disregard that, and then consider this as a normal sell side imbalance, buy side inefficiency. And then market trades back up into it here and then dumps into the mean threshold, the order block, and the rejection block as I indicated here. Now, I want you to go back and look at your charts and look for instances where we have these lower low piercings and then a higher high piercing, and then look at the first rejection block and see where you can see what I'm showing you here. You're going to be startled by it. You're like, wow, it's there. That's something you don't learn anywhere else. It's something that you cannot appreciate unless you know and believe in an algorithm. The algorithm is taking out the liquidity here. So the real point of interest is that rejection block there, not the fact that we went down here and it has a lower close. Yes, that is a rejection block, but the majority of the time, the sensitivity is going to be on this particular PD array right there. I think that's going to be it. In final summary, I want to talk a little bit real quick about the charter membership, folks. Here's your opportunity to go through it the right way. Okay, I would suggest you go through month one content with a brand new notepad, okay, or the spreadsheet as suggested. I made that same spreadsheet available to all of you that I've given to the new membership. And do it like we're outlining. All these lessons are going to seem fresh to you because of the commentaries I'm giving you. All the things and the lessons that are in each individual month, I'm going to touch on as we go through the commentaries. If you don't apply the things I'm teaching and reteaching with those lessons, you are not going to get the benefit if you would have just simply done it. And for some of you, it's going to give you that last little piece that you felt like didn't get delivered, but you'll find it was there. You just didn't put so much emphasis on it because you were worried about, when do I buy the wick? When do I buy the body? How do I know if the market structure is really broken or if it's just a stop run? All those types of questions. All those things will get answered this year. They will absolutely be answered, and you'll have a whole lot more things to look for in price action that gets to the nitty gritty. Okay, you'll know what you're looking for, and then by the time you get back to the charter level models and the algorithmic theory that I'm releasing for charter members, you'll have it. You'll have everything that you were looking for, and then you have to just practice with that. And how much time will you require to get it beyond there? That's all dependent on each individual person. It's unique, and no one else can say this is how much time it's going to take. For some of you, you might go through over the next 4 months as a charter member and say, oh, that's it, I got it. It's now I can see it, because I've already got that already. I've gotten people email me saying, Michael, I'm 2016, I got it now. Now think about that, folks. We're in 2021. These poor souls have endured all this time, and now they finally got it. They know what they're doing on their own. Not all of them. I still have a few in here that are still, they haven't communicated to me that they finally got it. But they got it by doing what I'm telling you to do and releasing the necessity of, I have to be trading live. No, you don't. Because if you don't know what you're doing, why are you picking up a live account? Don't even open up a live account. Don't do it. It's going to be an enticement to do something you're not prepared for. You need to be bored trading in a demo consistently, not caring about sharing your results with other people. Because if you feel that impulse, you're not ready for live trading, because you're asking for someone to validate your prowess. And I don't care what other people think about what I can do. I already know it. And when you feel that way, and you're indifferent about social media or the opinions of others or the people around you, or even your spouse, then you are absolutely ready. You're ready. You determine when you pull the trigger on that, though. But as far as the content and the lessons, we have a lot of really good stuff coming in this year. But you have to be prepared. You have to really be diligent about studying. It's a lot of stuff. And it's a lot of critical thinking. If this, then that. If this and that does not happen, then this. It's a lot of logic. But if you submit to it and you keep really good notes, it will steer you in the right direction and hopefully prevent you from falling victim to what would otherwise be retail logic. So with that, I'm going to close this one. Wish you a very pleasant weekend, and I will touch base with you on the midweek review on this coming Wednesday. It will be a little bit juicier commentary, because usually we don't do a Wednesday video that's all that impactful and really lush with content, but it's the first lesson for all of the mentorship students that are coming in. So I want to kind of greet them with a pretty big one, and then we'll continue on our journey throughout this new year in 2021. Be safe.